Good evening, viewers. Accounting Equation Academic Channel presenting the second episode on the subject financial management from the chapter Cost of Capital. In my preceding episode, I had discussed with you about the meaning of cost of capital and various sources of capital available to a firm, and these sources are not free of cost. They the investors who provides their saving investment into firm, they have expectations to get something in return from the firm, and number of investors, different types of investors. And in the topic cost of capital, we have to calculate the rate of return they are getting or they have expectations by assuming certain basis. So the cost of debenture is calculated on the basis of perpetual or irredeemable and redeemable debenture. So in past we learned about debenture which is non-redeemable or irredeemable or perpetual. Now in today's class, so I am going to discuss with you about debentures from redeemable point of view. So the formula for calculating cost of redeemable debt or debenture is as follows, and it is also calculated before tax and after tax. Interest on debentures having tax advantage, as the interest paid on debenture is deductible from the profit while calculating net profit of a firm, and that is why it has advantage of tax and tax saving. So before tax, the formula is on your screen, and when it is redeemable, repayment, so meaning of redeemable means, so after a specific period of time the debenture holders are repaid, which is redemption or redeemable, and it is calculated using this formula. KD stands cost of debt and I interest plus 1 by n number of years after redemption, and this is your redeemable value, this is your NP, net proceeds. So here redeemable value and net proceeds and number of years of redemption, after how many years the debenture is going to be redeemed, that is number of years. This is the formula. And before tax and after tax formula, the difference is that 1 minus t, t stands for rate of tax or tax rate. So if it is before tax, 1 minus t is not used. If it is after tax, then 1 minus t is used just after interest amount, because interest amount is deductible. So tax benefit is available on interest amount, so that is why it is multiplied by interest amount. Okay, now, and this is for expressing percentage, and below same redeemable value plus net proceeds divided by 2. Net proceeds, which is the amount received by a firm at the time of issue of debentures. So when company or firm issue debentures, it has three options. It can be issued at par, it can be issued at premium, and it can be issued at a discount. And moreover, so when debentures are issued, there are certain expenses are to be incurred. So that is that expenses amount, if any, is deductible and from the face value. Okay, so that thing details I will explain you with the help of one illustration. So here one illustrations I have taken. See on your screen this. A company issues 50,000 10% redeemable debentures at a discount of 5%. The cost of issue of debenture amount to rupees 3,000. So for the issue of debentures, company has incurred expenses rupees 3,000. The debentures is redeemable after 5 years and at a premium of 10%. So issued at a discount and redeemable at premium. Calculate before and after tax cost of debenture. The rate of tax applicable to company is 30%. Okay. Now the formula we will use as it is explained above, that before tax and after tax formula. So that formula we are using here to solve this problem. So here it is written before tax. So KD equal I plus 1 by N into RV minus NP, again divided by RV plus NP by 2. Okay. Now here the amount of each component is calculated on the right hand side of the formula. Here the I stands for interest, so rate of interest is given here 10%, and the face value of debenture is 50,000. So 50,000 10%, it is amount 5,000. And a redeemable value after 5 years, how much amount company is going to repay to the redeemable debenture holders, that is redeemable value after 5 years. So the face value 50,000 plus 10% premium here. So face value to company will give plus 10% of premium is also included. So here, so again 10% of 50,000, it is 5,000. This is calculated redeemable value, face value plus 10% premium. So face value is 50,000 plus 10% of 50,000, not the net profit. So face value always we consider, this is the face value. Okay, so then 5,000 and 50,000 plus 5,000, 55,000. So it means that after 5 years company is going to redeem to debenture holders rupees 55,000. So this is the redemption period 5. Okay, now same values we are putting in the formula. Here 5,000 is the interest, since we are calculating before tax, so tax rate will not applicable here. And this is the redeemable value minus your net profit. So net profit is calculated here. This is net profit. Face value minus 5% discount minus cost of issue of debenture. This is the net profit. So face value is 50,000. Okay, face value is the 50,000. This is the 50,000, and 5% discount of 50,000 is 2,500. So that is the discount amount is coming. So in the next page it is calculated. Now you see here I am deducting from here. I will show you in the calculator. So the face value of debenture is 50,000. So 5% of this is into 5%. So 2,500. So minus it. So you are getting 47,500. Again cost of debenture is cost of issue of debenture is given in the question 3000, so minus 3000, so you are getting 44,500. This is your net proceeds, and here the net proceed is 44,500. Now this average of these two amount is taken, so that is divided by 2, and 5,000, and here here 55,000 minus 44,500, so difference, so you will get here 44,000, 55,000 minus 44,500, so your difference is 10,500. And redeemable period, redemption period is 5 years, so divided by 5, so you are getting 2,100. So these calculations of this calculation, and up to this calculations we will get 2,100 amount, and here 5,000 plus 2,100, and this is the average 55,000 plus 44,500 divided by 2, 99,500 divided by 2, so you will get 49,750, and this 5,000 plus 2, 7,100 divided by 49,750 multiplied by 100, so here also 100 it is omitted, so you can add here 100, so this 100, this 100, okay, same 100. So when we divide it, so this is your, again I will show you here this one, so 7,100 divided by 49,750 multiplied by 100, so result is 14.27, so here 14.27%. so this is the rate of interest payable by a company before tax in the case of redeemable debentures. So this way we calculate it. Okay, so now this is before tax. Now after tax, now I'm showing you. You see here it is calculated here. 50,000 is the face value minus 5% of 50,000 minus 3,000 expenses, issue expenses. So here 55 to 1000, this is 44, and the rate of tax is given in the questions, 30% applicable, so 30 by 100, so when you divide it, so 0.3. Alright, now putting this value in after tax, then we will get what is the rate of interest paying by the company. So formula is almost same, only now this time after tax, so this part is adding. Okay, before tax this part is missing or omitted, after tax this part is added here, that is multiplied with the interest amount. Now you see this, so and other things are remain same. Okay, so interest is 5,000 as we calculated, and here the tax rate 1 minus 0.3, so here, and this the values you will get 2,100. Okay, so here the 5,000 and 1 minus 0.3 you will get 0.7, and 5,000 into 0.7 plus 2,100, so this part you, when you multiplied it plus it, so you will get 5,600. Let I will show you here. So 5,000 is the amount of interest into 0.7, it is 3,500 plus 2,100, here 5,600. Okay, so this is 5,600 and this 100 is here, and when we divide this 5,600 into 100, divided by 49,750, then the results which we are getting 11.256. so third place is more than 5, so your preceding figure increased by 1, so here 11.26%. okay, so this is the how we calculated the cost of debenture. So this is your 11.256, so 11.26%. this is the cost of debenture or rate of interest payable to debenture holders after tax is 11.26%. okay students, so you watch it and pause the video, note down in your copy, practice all of you redeemable debentures. okay students, thank you.